Hello there, welcome to Financial Accounting Info. Today we want to look at a question from still on June 2023. This is question 2 on June 2023, and it requires us to prepare membership fees account and income expenditure account. So the question reads, the information given below was taken from the books of your local tennis club on 20th February 2022. So on the required part, it says prepare the following general ledger accounts, and then 2.1 we've got membership fees account, and then 2.2 we've got income and expenditure account. So let's look at the information that we are given in the question concerning those two accounts. We have the information concerning receipts and payments there, and also above that we also have certain information that we are given there. If you look there, we have got the first table that we are given in terms of the information. We've got balances on 1 March 2023, these ones, and then we are given these balances, and then we are given on receipts and payments for the year ending 20th February 2022. So the first part requires us to prepare a membership fees account. But our membership fees account is an income account, remember. So whenever we have an income account, in terms of treatment of these balances, we've got balance that we are given in terms of opening balances. We have income receivable, and then we've got income received in advance of membership fees. So income receivable means this is the balance that is owing for membership fees, and then they are owing, or they are the accruals of these membership fees that we haven't received. Remember, this is income. So this is at the beginning, the balance that we have at the beginning in terms of those that are not yet received. And then we've got received in advance, means this is a prepayment, or in that one that is paid in advance. So they are membership fees that are for the next period that we have received this period. So this is the scenario that we have here. So you should know where to place receivable and in advance balances at the beginning when it's an income account. Remember, the treatment is different when you are now looking at an expense account. So in this income account, this is how we should treat these balances. For accrual, opening accrual, that is at the beginning of the year, we should see it on the debit side. And then accrual at the end, we see it on the credit side. Then the opposite is true for advance. We should have an advance, opening advance at the credit side, and then closing advance at the debit side. So this is what we are supposed to. So if you look in our question, we are given receivable income receivable at the beginning is 6,000. So this is an accrual, so we should put it on the debit side. And then we've got in advance at the beginning here, we will get 1,600. So we should put it on the credit side. So this is simply that we are going to do when we open this membership fees account. So if you come here, we have this membership fees account, and our balance are already placed there. We've got income receivable, that is an accrual. We should see it on the debit, 6,000, and then in advance, it's on the credit, 21,600. So having done this, we go back to the information that you are given in the question. You would see that the information that we are given, we now want to look at the information under receipts and payments. That's when we are going to have information concerning this membership fees account. So if you come here, we would like to see information under receipts that are affecting the membership fees account. If you look here, we've got entrance fees. We have got also get takings. They are not affecting membership fees account. But if you look here, we've got membership fees that were received for 2021, and then membership fees received for 2022, and membership fees received for 2023. So these amounts, we are supposed to enter them in the membership fees account. And remember, we are receiving. So whenever we are receiving, we debit the bank account and then credit. So the double entry for these ones, you see that the double entry for these ones, we should debit the bank because we are receiving money, and then we credit the income account. In this case, we credit the membership fees account. So this is the scenario that we have. And then so we are going to go to the credit side of our membership fees account and enter these ones, these amounts, 4,800, and then we enter again 12,800, then we enter again 12,000. So we go to our answer section, and we are going to input those figures. So if you come here, we are going to say this happened on 20th February. So this is the date section, 21 February. And we would see that for bank, the one that we received for 2021, according to the question, this is bank 2021. We have an amount of 4,800. Then we have got also the one that we received for 2022. For 2022, we have 112,800. Then we have for 2023 again, bank for 2023. We have 12,000. So this is what we have in terms of this that we received. And then we're going to look again for other information that is affecting this membership fees account. If you come here, after our membership, we have finished in terms of the receipts. We have finished in terms of the receipts. So we go to the payments and try to see what we have on payments. Right, on payments, we have what we start with membership fees refunded. That is the first one that we have there. Membership fees refunded. This one 10,000. So it means when we did this double entry of debiting bank and credit membership fees. So when they are refunding, it means we are reducing the amount of membership fees. So we're going to the opposite side, we are now debiting the membership fees account. So and then we credit bank. So basically that double entry that is going to be there is that we debit membership fees account, and then we credit the bank account. We are now doing the opposite since it's a refund. So that's why. So what we want here is the membership fees account. So that's the one that we are going to debit, and we say bank on the details part. Then we go there, and then we go to the debit side here, and then we say bank. And remember, these are refunds. And then in brackets we can just say refunds, and then the amount there is 10,000. Then we try to go back again to try to see what we can do with other information that is affecting this membership fees account. So if you go there, we go to the information that we are given, the additional information, and try to see what type of information can affect this membership fees account. So it means the information that we have in the table there is we have finished everything there. So we go to additional information and try to find out any information that is affecting the membership fees account. So we have the first part is saying membership fees still outstanding on 2021 must be written off. So if you come here, we have the memberships fees that were there in 2021. We have 4,800. We have 4,800 there. Yes, we can see that it's 4,400 that we have there. That is the amount of membership fees for 2021 that we received. But what we were supposed to receive is mentioned in the balance there. We are seeing that for 2021, the balance owing was 6,000 here. We've got 6,000 here. That was the balance that was owing for membership fees. But what we received is 4,800. So what they are saying is the difference that is there was we received 4,800, which means we've got an extra that is there, which is 6,000 minus 4,800. Then if you calculate it very well, you are supposed to get 1,200. So it means we have not yet received 1,200. That is the balance that we have not yet received. So this balance is being said that we should write it off. So this is coming as a bad debt, the treatment of bad debt, because we are no longer going to receive this, so we are writing it off. So by writing it off, we are now crediting the membership fees account. Remember, we are not crediting the membership fees account with this amount, that is for 6,000 minus 4,800. So if we go now to the credit side of the membership fees account, credit side of the membership fees account, and then we put that amount that we have in there. So this one is credit losses. Credit losses. So we see 6,000 minus 4,800. And then if you calculate it very well, so correctly, you are supposed to get 1,200. You get 1,200 there. Right. So this one is 4,800. 4,800 here. Right. So if you calculate the value, you get 1,200. So that's how we treat this one that we are not going to receive. Then we go back to check the next information that we have concerning membership fees account on additional information. We go back to our additional information. If you go to our additional information, the second part is saying 60 members must still pay their subscriptions for 2022. Fees are 400 per member per annum. So we are seeing that they are saying 60 members must still pay. So it means these 60 members haven't paid. These 60 members haven't paid their amounts. So they must still pay. So this one is an owing. This is an owing, and this is happening at the end. So this is an accrual at the end. Remember the treatment of accrual at the end there, that we, according to the breakdown that we gave there, this is accrual at the end. We said it should come on the credit side of the income account. So in this case, we've got the membership fees account. So we have 60 members. So to get the total there, we multiply 60 by 400. 60 by 400 to get the total. Then we get, if you multiply that one, we get 24,000. So we are going to put 24,000 on the credit side as an accrual CD at the end of the year. So we come on the credit side here, and we are going to say income receivable. Income receivable. And then the amount that we got there, we say it's 60 times 400. And by multiplying that, we got 24,000. So here we are going to say 24,000. So that's what we have there in terms of that one. And then also let's try to see another information that is affecting this membership fees account. Then we see if you come here in the balance that we have got membership fees that were paid in 2023. Remember, we are in 2022. But these membership fees for 2023 were paid in 2022. We are still in 2022, but we are seeing that membership fees were received for the period of 2023 were received in 2022. Since the period that we are is 2022, but we have already received membership fees for 2023. So this 12,000 becomes in a prepayment. So if you look again on the breakdown that I gave here, when it's a prepayment at the end or an advance at the end, we see it there. Closing advance comes on the debit side. So that figure, we are going to put it on the debit side. So we have here, let's see this figure that we have for 2023 for membership fees for 2023 is 12,000 here. So we are going to put it on the debit side. So we go back again to our membership fees account. We go to our membership fees account, then we come on the debit side, and then we are going to say income received in advance. This is income received in advance. And we are given it as 12,000. Right. So having done that, now we now balance our account. Remember, the balance that we are going to get, we are going to transfer it to the income and expenditure account. And this is income. All incomes are credited in the income and expenditure account. So we're expecting to debit it. The balance should be on the debit side here. We debit the membership fees account, and then we credit the income and expenditure account. So we balance this account and put some double lines here. And you know how we do it when we are balancing. The greater side will go in between the double lines. Then the balanced figure, we put it there where we have a smaller total. So if you add the credit is the bigger side. Obviously, we add the credit, you are going to get 176,400, 176,400, 176,400, and then you subtract 176,400 minus the total for the debit side. So if you come here, you'd see that our total, right, we add, we are going to say 176,400 minus 12,000 minus 10,000, then minus 6,000. If you do that, you get 148,000. 148,000 here, 148,400. Right. So this figure is the will go to the income and expenditure account. So it will be credited now in the income and expenditure account as income. Income and expenditure account. Right. So that is what we have on the membership fees account. Now we want to move on to the next one, which is the income and expenditure account. Income and expenditure account. So all incomes will come on the credit side of the income and expenditure account, this side. Then all expenditures will come on the debit side of the income and expenditure account. So if you go in the question there, yeah, let's start with the income that we have. We come there on the section of receipts. That's where we have our incomes. At first, we have got the entrance fees for 256,000. So that's the first income that we have. So before you enter that income, you go and look at if you have got any prepayments or accruals or any amount that was paid in advance or any that is still receivable in the additional information, and adjust for that before you enter. But if there's no adjustment, you just enter the figure that we have here in the table. So according to entrance fees, we've got 256,000 in the table. Then we check there if there's any adjustment. If you come here, number one is saying membership fees still outstanding for 2021 must be written off. So this membership fees, remember this membership fees, we already prepared the membership fees account, so this one is not going to affect the entrance fees. So we go on to check where we have got anything that is affecting this entrance fees. If you go to number 3, we have entrance fees of 56,000, which must be capitalized. Entrance fees of 56,000 that must be capitalized. So what does it mean when you're capitalizing this income? Entrance fees is income. When you're capitalizing income, we are saying this amount of 56,000, we are transferring it to be a current asset. It's now going to be an asset. So it's going to be entered in this statement of financial position or balance sheet as a current asset. So 56,000, we are going to subtract it from the figure that we have for entrance fees that is there in the table. So what we are going to do, we are going to say 256,000. We have 256,000 there. We are going to say 256,000. Then subtract that 56. So what amount do you subtract that 56,000, and then if you do that, you are going to get 200,000. So here you get 200,000. So this 200,000 is the one that we are going to put under income. We go there to our income and expenditure account, and we said income comes on the credit side. So we are going to say entrance fees, entrance fees. And remember, on the date here is 28 February. And then the amount that we are going to say 256,000 minus 56,000. So if you do this, you are going to get 200,000. There you get 200,000. Okay, so we get 200,000 here. 200,000. Right. So we go again to check if we've got anything again that is affecting this income and expenditure account. So we are still on receipts or income. We have got entrance fees. We've adjusted for entrance fees. Then we've got get takings. That is the next one. So we go again on additional information that we have to check if we have got anything that is affecting get takings. We check there. It's up to 6 additional information. If you check there, it's membership fees. We have nothing to do with get takings. We check each and every adjustment that we have. We do not have anything to do with get taking. So in such a scenario, you take the figure that you are given there in the table and put it as it is as get taking. So we got 234. You come here 234,500, 234,500. So you're going to put that one. Then we put it under on the credit side. So these are get takings. And the figure that we have is 234,500. Right. Still on receipts to check again if we have got any other amount. Remember, we calculated the one for membership fees also, and we said membership fees is an income. So that balance that we got, to say it, we are going to input it under income and expenditure. So the balance that we are talking about is here. The balance that we are talking about is here. This balance, 148,400. We are going to input it under income and expenditure as membership fees. So you have got membership fees. Right. Membership fees, the amount that we got there was 148,400. Okay, let's try to remove this. Right. Then we go again to check if we have got any other income that we have in the information that we are given. Right. If you come here again, let's go to additional information. Was we finished under on the table in the table there in terms of any income that is there. Right. We have number 4 is saying provide for outstanding interest on the fixed deposit. So interest on fixed deposit. Remember, fixed deposit is comes as a non-current asset. So we are anything that has to do with interest on that non-current asset becomes income. So we've got interest on the fixed deposit at Capitec Bank. The investment was made on 1 January 2022. Remember, here the account that we are preparing, the income and expenditure account, we are preparing it on 1 March 2022. So this fixed deposit is said to have been made on 1 January 2022. So what does it mean? It means this fixed deposit was only there for January and February. Then on 1 March, we were preparing these accounts. So they were there for only 2 months. So what we are going to do, we go to the fixed deposit and find out about the interest of that fixed deposit. We see that the fixed deposit is there on the list of balances there. We have got this one fixed deposit, Capitec Bank, 12% per annum. This is per annum, but this fixed deposit was only there for 2 months. So we are going to calculate it. Then we calculate the proportion of 2 months. So we are going to say 12% of 1,350,000, then times 2 months, which is 2/12. So we go back to our to account there and say interest on fixed deposit. Interest on fixed deposit. So this interest on fixed deposit, we are going to say is 12%. So we say 0.12 times 1,350,000. Then it stayed only for 2 months, so 2 over 12. So if you calculate that one, you're supposed to get 27,000. Right. So that is what we have in terms of income. Then we go to expenses that we have, or the expenditures that we have. If you go there, we now go to the section of payments. Section of payments. That's where we are going to get those expenditures. We've got insurance. Right. We've got insurance, 128,700 here. And then we check if you've got anything to do with insurance there. In additional information, we are seeing we don't have anything that is there for insurance. So we take the figures it is and put it on the debit side of the membership fees account. Remember, all expenditures we said they come to the debit side. So we come here now and say, remember, this is on 28 February. 28 February. So here now we say insurance. We say insurance, and insurance is 128,000. 128,700. Then we go again to check the next one. The next one after insurance, we have got membership fees refunded. We adjusted that on membership fees. Then we go to stationery now. Stationery. So what it means is this stationery was the one that was bought, and then we try to see if there's any stationery that was left at the end of the year to calculate the one that was used. The one that was used is the expense. So we bought 4,200, and then we come here on 5. They are saying after stationery when end as per the physical inventory count at year end 1,800. So this was left now. So what was used is now 4,200 minus 1,800. So if you calculate that correctly, you're going to get 2,400. So this is what we are going to put on stationery. So we go there again. And then we say 4,000. This was in stationery. Stationery, and we say we are going to say 4,200 minus 1,800. So if you calculate that correctly, you get 2,400. You get 2,400. Right. After stationery, we go again to check another expense that we have, or expenditure that we have water and electricity, 7,500. And then we check again if we've got any adjustment to do, because water and electricity is here, 7,500. Any adjustment to do with water and electricity, we don't have. So we're going to put as it is. We have water and electricity. Here, water and electricity. And the amount that is there is 7,500. 7,500. Then we go again to check another expense that is there. Right, we have finished what we have in the table, so we go to additional information to find out about other expenses. So if you go down here, you check other expenses that are listed there. We've got equipment is depreciated in 50% per annum according to the diminishing balance method. So depreciation is another expense. Remember, depreciation is a non-cash item, but it's also an expenditure regarded as an expense. So the formula for calculating depreciation using diminishing balance method, we say percentage that we are given times the carrying value or the net book value, where the carrying value will be equal to costs minus accumulated depreciation. So we go to equipment. We've got balance of equipment that were given at the beginning of the year. If you come here, we have got balances that we are given. Equipment that costs 885,000, and then it accumulated depreciation is 150,500. So we are going to say the percentage that we are given times the carrying value. The carrying value is 885,000 minus 115,400. And the percentage that we are given to calculate is 15%. So we go again and make that calculation, summarize that calculation under in the answer section. So here we are going to say depreciation. On depreciation, we are saying it's 15%, so it's 0.15. We multiply by, we are going to say 885 for the carrying value, 885,000. 885,000 minus 115,400. 100 minus 15,400. So this is the calculation. And then if you do that correctly, you are going to get 115,400. 115,440. 115,440. So this is the calculation there on depreciation. And then if you go back again, remember there was a statement that was there. Let's go down to additional information. Right, on additional information, we are on number one, they said membership fees outstanding for 2021 must be written off. So remember, we are saying this is coming in the form of a bad debt, and the bad debt is an expense. So this one is also an expenditure because we are no longer going to receive this money. So so what we are saying is we said to calculate that amount of that loss, we said 6,000. The amount that we are given, the balances minus 4,200 that was received to get the balancing, that was 1,200. So that 1,200 is a loss that we're supposed to put on the debit side of the income and expenditure account. So you come here again, we already calculated that one. So we are just going to put it on the debit side there and say these are credit losses. And then we calculated that one is 1,200. Remember, when we calculated it there, we said the balance that we were given was 6,000, and then we subtracted 4,800. Get that one? Right. So that is what we have, guys, in terms of these adjustments. Remember, this one was the last one. So what we are supposed to do now next is to just to balance this income and expenditure account. So the balance that we are going to get is called the accumulated fund, and this will be on the debit side of this income and expenditure account. So accumulated fund generally is the term that is used to replace the term for retained earnings that we know in a non-profit making organization. So in a profit-making organization, remember, we after calculating the net profit is going to increase the retained earnings. So those retained earnings, that's the term that we are replacing with accumulated funds. So accumulated fund, basically, they are retained earnings for a non-profit making organization. So we are going to calculate the total for the debit and the credit. Total for the debit and the credit there. Right, so if you calculate there, we also make our double lines. And then after making these double lines, we add the total of the debit and the credit. So the total of the credit will be larger there, will be bigger there. If you add 200,000 plus 234,500 plus 148,400 plus 27,000, you are supposed to get 609,900, and there's a bigger side, so it's coming in between the double lines. 609,900. Then you subtract the total of the debit side. So the total of the debit side, you're going to add this from 1,700 to 1,200. And when you subtract, so generally you're just going to say 609,900 minus 1,200 minus 150,440 minus 7,500 minus 2,500 minus 120,700. So if you calculate that correctly, you are supposed to get 345,660. And this one, remember, we said we call it the accumulated fund. Accumulated fund. So that is what we have That is what we have concerning this income and expenditure account. So this income and expenditure account, like I said, replaces the income. The income is also similar to the income statement that we know for a profit-making organization. For a non-profit making organization, the income statement, we call it income and expenditure. At the end of the day, in a profit-making organization, we have what we call retained income or retained earnings. But in a non-profit making organization, we have what we call accumulated fund. So that is what we have there, guys. Let's stay tuned as we prepare for exams. Those who haven't subscribed, please subscribe so that we enjoy new videos that are going to come. We are going to give you more videos as you prepare for your exams. With that, I am out.